Comcast Business is celebrating Small Business Month by giving you a $1,000 small business bonus. Just imagine the thousands of possibilities of a $1,000 prepaid card, swag for staff, new equipment powered by gig speeds, or a 3D printer. Rapid prototyping, anyone? Switch to Comcast Business for over 99.99% network reliability, advanced cybersecurity, and now get started with the $1,000 small business bonus. Comcast Business, powering possibilities.
Hey everyone, and welcome back to another episode of the Financial Fit Podcast. I'm your host, Andre Creighton. As always, I'm excited to be with you all. This is honestly one of the most exciting times as an investor. The market had been down in April 2nd. We saw, a lot of turn in the market, a lot of volatility, and hopefully you were able to get in on some various stocks that you've maybe been watching. And now we're seeing that we're almost back to levels of where we were prior to some of that volatility. I think we're about 3% down, obviously, give or take some stocks, but overall, from a market standpoint, about 3% away from where we were. So we have recovered in about 30 days, a little over 30 days. So I guess I'm kind of giving you a little hint at what we're going to talk about today, but um, I want to talk a little bit about my journey. So I, invest in the stock market. I have about 8 different holdings in some individual stocks that I invest in. Some that I categorize as long-term holds that I'll always have in my portfolio until they hit a point where I feel um, they're worthy of being sold. Some are more of a short sell, so I'll hold them for a little bit, take as much profit as possible, and then I'll feed those back into some of my long-term strategies. And then I have a couple that are just gambles. I have two that one of the gambles I like is Lucid. So Lucid is in the EV space. Think of Tesla, right? I believe that they can be the new Tesla. They're trading at about $2.80 right now. I am super excited about this stock. Their technology is incredible. I believe even if they can't get to production levels of Tesla, that they will get to a point where maybe some of the technology will be sold to other auto manufacturers that are trying to break into the EV space. So lots of opportunity ahead. And then the other one is SoFi. SoFi, I think I've just been really impressed with their user growth and their, especially when it comes to their app. And I think that they are one that's going to grow a lot over time. I think people are moving away from traditional lending, traditional banking. I think that the SoFis of the world will continue to capture a bit of that marketplace, especially as baby boomers and baby boomers are retiring, and we're starting to see some of the millennials come into more wealth. I think also seeing the Gen Y, and then hopefully later down the line the alphas that um, likely will just look at banking differently than our generations in the past have. So with that being said, that's my journey. I try to be consistent in how much money I'm putting into this on a kind of, I would say, bi-weekly basis. So every time I get paid, I put money into my portfolio. I don't use all of the money that I deposit into portfolio. I like to use some and then keep some, usually kind of like a 70-30 split, 70 being the money that I'm keeping just in that money market on Robinhood, and then 30% being invested into various stocks. So the reason for that is the 70%, I really like to just have money on hand so I can act fast if something happens in the marketplace. So for instance, when April 2nd happened, like I put a bunch of money into the stock market, right? Because stocks were down, I could bring my average price down. It just made sense. So I encourage you to find what that balance is for you. But today we're going to talk a little bit more about some of the things that I like to do when I think about stocks. So um, a lot of people don't, a lot of people invest, but a lot of people don't really know how to invest or think or the right way to think about investing. I'm not saying that the way that I invest is the truth in the Bible, right? There's lots of different ways to invest, but this is my perspective on it, especially coming from a place of being a CFO and kind of seeing how companies, uh, looking at companies' financial health and how they're growing and such. So it's so important if you are invested in a stock in that's an SEC stock. So it's not privately held, so you're not angel investing, like you're actually investing in a stock that is IPO'd. You should be listening to their quarterly earnings calls. A lot of people don't do this. I have friends, people in my network that invest in stocks, and they don't listen to the quarterly earnings. I don't quite understand why that is. Maybe they don't know that these are available, or maybe it's just time. But if you're taking the time to invest in stock, you should take the time to understand the business. So I guess let's start. What are the quarterly earnings? So every quarter, a company will complete their month end, their quarter end, and they will supply financials. And during this time, the company management will publish whether or not they beat earnings. And they'll talk a little bit about where they're going and where the growth, how they did over this past. So they'll look in the rearview mirror and say, how did we do based on what expectations were? And then they'll talk about what's to come, so forward looking, so thinking about their what they call it as guidance. So what is their guidance for the next quarter or the rest of the year, et cetera, et cetera. So oftentimes on these quarterly calls, and I have a little transcript here because I know a lot of you you never really see me looking at a paper, and I typically like to, I plan these out, but I like to just kind of talk to you all and not be reading off a paper. But there's a lot of content that comes with this that I took notes on that I want to make sure that I hit the key things. So you may see me reading off a little bit of paper here, here and there, but I wanted to be able to give you guys the key things. So these quarterly conference calls basically are where the management reviews results, they review issues and provide guidance on where they're going. So usually the participants are for sure the CEO and the CFO. Sometimes other executives, especially if they're sometimes you might get like a chief growth officer or chief revenue officer um, or a chief marketing officer. It kind of depends on what kind of the angle is for what guidance they're providing for that forward looking. So these typically come out. So let's say the first quarter ends March 31st. These typically will come out either sometime at the end of April, at the latest, like the very beginning of May. But for the most part, there's about a 1 month lag on kind of when they will have these calls, and they're kind of spread out. So they happen throughout the month of the following month, the preceding month from close and into kind of that second month. um, so I think the things that we need to be really thinking about and really focus on when you're listening to these calls is you want to look for the shifts in the executives' confidence, and if is there anything that they're cautioning you on as far as foreshadowing into the future. If you've listened to any calls following Q1, there's a lot of executives right now that are lowering guidance, so meaning they're being a little bit more bearish on um, what the outlook is because there's a lot of things happening with this new administration, whether it's tariffs and the impact on that on the business, or maybe the tariffs and the impact on that on consumers purchasing said product or service. So there's a lot of uncertainty, and with uncertainty, you'll start to kind of be able to see the difference in confidence levels. And that's why I say these are so important, because if you listen to past ones, you kind of get used to what you'll expect to hear from a CEO and kind of like how they like to drive these calls. Now, if things start to sound a little different than they have in the past, I think it's worth you digging more into, right? Why is the CEO seeming a little bit more bearish on stock, or bearish on the company? Um, So this is also your time to really evaluate like what is management highlighting and what are they also glossing over, right? So for instance, I'll give you one. I have Disney stock. I listened to the Disney call, and man, management was very high following Q1, talking about their wins with uh, the movie The Lion King. Um, and that came out in Q4, right? And they're still talking about it at the end of Q1, but which is great. Like Lion King was a huge hit for them. They're also talking about Moana, who also was a December movie, right? Um, Now, since then, they've come out with Snow White. They came out with another movie that I can't remember right now. But both of those movies were huge misses, right? And those came out in Q1. So this is an instance of something where they kind of glossed over it, like they talked about it a little bit, but they quickly pivoted back to talking about Lion King and Moana because those two were not a hit. And they also talked about how the money that they made from Lion King and Moana covers kind of some of the missed revenue that they didn't get with Snow White and some of those other movies. Um, this kind of cautioned me because and I actually sold some of that stock the next day, along with kind of a lot of the marketplace. Now, the stock is up, so I did get to see some profits in that, but that kind of scared me away because um, one, I'm not really too big of a believer in their streaming. I just don't know. Like, yes, their streaming is huge. Like, we use Disney Plus here in my house, but like Netflix, for instance, is always going to dominate the streaming business in my purview. So that's just one example. Um, I think it's important to understand what their future projections are. So future projections often move stock prices more than historicals, right? So past results, right? So people are always wanting to know what's happening into the future. Like, yeah, what happened in the past is great. Like, yeah, we want to see that you have great fundamentals and some of those things, that you're financially stable, et cetera, et cetera. But where you're going in those future financial projections are what drive prices up. Um, I think tracking kind of the upward versus downward adjustments to revenue and EPS, so earnings per share, and margin signals, those things signal momentum and headwinds. So we want to be able to understand like how has revenue been flowing? Has it been upward? Are we expecting an upward trajectory? Are we expecting a downward turn? What's earnings per share look like, et cetera, et cetera. So I'm not diving into like what all of those mean today. That would take much longer than the time we have today. But those are two big ones that I look at, kind of looking at the swings and what is it signaling to me. Um, I think the Q&A opportunities in these calls are huge because it really puts management to the test because they're unscripted questions, right? Like a lot of times when management is providing guidance, like they've prepared for this, like they know what they want to talk about, what they don't want to talk about. But when you get the Q&A session, like these are unscripted. So like they're answering questions that are coming from the community of investors or analysts that are out on the exchange. Um, and this is the opportunity to really get a good feeling of how is management really feeling about the business? How are they responding to the very tough questions that are being asked by the community of investors, right? So I really like the unscripted questions. I think it's very important to read between the lines and understand how management answers these tough questions. I think it reveals a lot about their priorities, and also I think it also shows too like their risk appetite, right? Um, so I think the other thing to be cautious of is the whispers versus reality, right? So oftentimes, in between these calls, you'll have various analysts, whether it's Goldman Sachs or whether it's JP Morgan. I mean, there's a litany of them that are, analyzing the stock, analyzing the company, and they're providing like what they believe the guidance is. So what we call whisper numbers is kind of the street expectations. So these are what the analysts are saying. So um, street expectations are typically circulated informally. So um, I think it calls for you to really understand what those street expectations are, because they do give you some guidance, but it's also important for you to check that against actual guidance. So um, it's important to compare what was reported versus what was expected, and then parse out management's explanation for any gaps. So you want to understand why if they didn't beat earnings, why didn't they beat earnings? For instance, you know, Apple, and I don't have Apple stock, just because I don't believe that they've been very innovative as of recent. So I don't have Apple stock. Maybe I will have some later. I don't know. I actually had some in the past and I sold it. But um, Apple, for instance, maybe they didn't beat earnings, right? Because they had to buy a bunch of supplies for their iPhones now, because in fear of the tariffs coming, so they front loaded a lot of stock, right? Now, I don't know if that's true. I haven't followed their quarterly earnings. I'm just giving you an example of what could potentially have happened, what potentially could happen when you're thinking about guidance and why maybe a company didn't beat earnings. Um, I think it's important for you to understand. So there's this thing called gap. So gap is like what you have to follow when you're an IPO company. The Securities Exchange Commission requires you to follow gap. However, there's also non-gap. So, there could be things non-gap wise that are being parsed out of gap to show as kind of they're one-off things, right? So, yeah, we didn't beat earnings, but here's all the one-off things that happen that won't happen in the future. So we know that we'll get back to beating earnings. So one could be, yeah, we're going through a huge lawsuit, and we're having to pay out millions of dollars to beat this lawsuit, to fight this lawsuit. We know once we beat this lawsuit that this is a one-off thing, and we will get back to beating earnings. So, like, these are the things that we need to be thinking about as we're investing in stock. I think the other things too is building a repeatable process. So, I started getting into charting, so I like to kind of look at the trend lines. So I want to know, I want to also understand my support, my resistance. So the support and resistance are very, very important when it comes to stock. We're not going to dive into what support and resistance are. That'll probably be for another episode, but you can look them up. There's some very, very clear definitive explanations of what support and resistance are, but I guess at the highest level is it shows the points at which people will buy and the points at which people will sell off. So it's very important to know kind of where the support and the resistance is and how those change over time, because that's going to tell you, kind of give you some indication on whether the stock is going to continue to rise up or when there might be kind of reversal and kind of a big sell-off. So these are things I'm looking at. Above that, I'm always trying to buy down my average, so dollar cost averaging. I just believe that I was once told that you don't lose until you sell. So in my buy and hold, when stocks are down, I buy. When stocks are up, I tend to look at kind of my support and resistance levels. And sometimes if I see a big, like, it's going to continue to go up, I might buy them in like 10% increments. I might put some money in to just kind of be in the game. But then once it drops back down, like, I'm loading the boat um, to buy a bunch more. So hopefully you learned something today. Hopefully you're in the stock game. Like I said, the stock market is one of the best places to build wealth if you do it right. It's the one place that always has a return. Obviously, sometimes there's times of volatility. Right now, we're seeing that volatility, but right now, there's no better time to buy stock, right? So, as I always say, it's not about how much money you make. The power is in how much money you keep. I'm your host, Andre Creighton. Thank you so much for being here with me today. I'll see you all next time. Take care.
You know Sheletta makes you laugh, but did you know Sheletta Brundidge can also make you think and boost your business? Media personality, activist, and comedian Sheletta Brundidge founded Sheletta Makes Me Laugh to celebrate and share the best of Black culture. It's a podcasting platform. You can download 10 weekly podcasts hosted by African American subject experts at ShelettaMakesMeLaugh.com or wherever you find your favorite podcasts. ShelettaMakesMeLaugh.com is also a production house creating broadcast quality commercial content. And Sheletta and her team of storytellers create powerful promotional campaigns to get businesses the brand awareness they're looking for. Some of Minnesota's top businesses trust Sheletta, and you can too. Get out the word about your events and products and get in front of communities of color with ShelettaMakesMeLaugh.com. She's got the power to help your business.
When I was introduced to Bremer, I really appreciated it. It was more of a relationship. The support that we have in project-based lending, it's emboldening us to go after larger projects. That is a game changer for a small business. The resources and the support from Bremer Bank is exciting that I could stay with them forever. Sometimes when you're working with bankers, they relish the fact of saying no. With Bremer, it's like they're finding a way to say yes.